Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 25th of August. All right, what a difference a day makes. A big jump in the US dollar right now. I think this is more US dollar repositioning or squaring up ahead of the Jackson Hole sort of symposium as opposed to fresh positions, right? And you can see that by the strong price action. Now, the general news, though, dollar loiters at 2-month peak ahead of Powell's speech. Now, there's a number of things that came out, right? The initial jobless claims numbers were 10,000 less than the expected number. Now, I'm telling you, normal market conditions, that doesn't really touch the sides and shouldn't really have that much of an impact. Now, also, this is the other part of it as well. You got to be careful what you sort of factor in here. Now, a couple of the Fed officials, okay, came out and were saying, tentatively welcoming the jump in their bond market yields, right? Saying it complements the US central bank work to slow the economy down. Now, these two central bank or Federal Reserve members are not board members, right? They've got nothing to do with policy. Now, have they been wheeled out to sort of give the market the heads up on what Jerome Powell's going to say? Possibly, but I think two of them, it could be, it's more than just a coincidence, maybe, but they're not voting members, okay? The main release will come from Jerome Powell later today. And don't forget, there's going to be probably more over the weekend after this symposium is over. So, and there's other things in there as well, right? And I'll show you the charts in a second. Now, there's 10,000, right? It's just outside the range, but it's not a big change. And in actual fact, if I just scroll up just a touch, okay, let me just get rid of that. The one thing that I was looking at, like durable goods, right? This is a big number. Okay, big structured number, and it attaches to a number of areas: retail sales, employment, all these sorts of things. Now, I know it's not outside the range, okay, the low forecast, but they were expecting -4. It's within the expectation of range, but that's a really weak number and a worrisome number. Now, take out transport, and it's up 0.5%, which is on the high end. So maybe that's the market's just behaving very fickle this week, and then you got those jobless claims numbers as again. Well, once again, it's not enough to get a big move like we saw. Now, if I just give you a look at the charts, right, this is a little bit mind-blowing because you've got a very big move here in the dollar index. Also, I mean, the dollar's gone against everything, right? So you've seen a very strong dollar move, euro lower, I just can't imagine leading up to this. And see how these moves are very exaggerated, or, I'd say out of the normal for what we've been seeing as far as fundamentals go. I think it's just repositioning, right? This looks like to me like after the euro came back, looks like the market's got long, or they're sitting long and it's squeezed lower, right? There's no real levels to get out. So the market hangs on, and that's what you get. You get a long squeeze to the downside. And that's very prevalent on all these instruments. Like that move down here, 127.20 down to 125.70. They either know something very clearly that I don't, which is quite possible, or the market's just been screwed over. Like the day before, we have those moves against it and then a flush out on the other side. I think it's just a squeeze. I don't think the real move has happened yet. Even if Powell comes out now and says, yeah, we're going to keep policy tight and all these things, well, everything's already moved, right? I don't see too much left in the dollar, right? It can only get worse from here. I can't see it getting better. Now, coming in and sort of focusing on what's going to happen today. Now, the market with these current moves from yesterday, the markets have been beaten up, right? And they're in the middle of nowhere now. There's no sort of levels to really sort of focus on. The market will be watching German GDP and the IFO data very closely. Wholesale sales, if you're in Canada, check that out. But you probably want to go over the dollar move at this stage. Then you've got a bunch of US numbers here. And then you've got Jerome Powell sort of due to speak at 3:05. Christine Lagarde at 8 p.m. Okay, this is UK time. So, and then you got the Jackson Hole Symposium. I don't think we're going to hear too much from Jerome Powell leading into the symposium. Usually you get the big rollout of the big fanfare at the end of these events, right? So I just don't know why the market is going so crazy off the get-go, because there's a lot more to come than what we've seen so far. And the this thing here, 24th to the 26th, this is where I expect to hear at the end of this event what's going to happen sort of globally. Now, I don't know if Jerome Powell is in a position to sort of come out and say, yeah, I know they want to sort of control inflation, but like this is what they're trying to do, right? Is paint a picture. This is whether it's the media or various players saying, oh, yeah, the labor market's really tightening up. It's 10,000 better off than what the forecast was. And that's like nothing across the US, right? A 200,000 variance would usually give us a move like we saw today or yesterday on the screens, right? So I just think this is overcooked. There's something weirder going on. Bond yields in the US, well, they are sort of moving, but, it could easily turn around is what I'm getting to, right? So don't put all your eggs in the one basket just yet. If we look at the overall global markets, right, the medium-term equity markets are getting hammered, right? Does Jerome Powell want to come out and talk that up? This is the raw nerve, right, that they almost have to protect. Like the Fed has protected the equity markets in the US since the global financial crisis, 2008, 2009. Now, they need to control inflation. If that's the case, we'll talk rates up or raise rates and crush that equity market. But that's going to be another problem for them going forward as well. But as you can see here at the moment, on a daily change, US equity futures slightly up. I mean, it hardly moved, mind you, but we do have a clear risk-off day in the trading, probably the purest I've seen all week, where the dollar is going up against everything. Euro, sterling, Aussie, Kiwi heading lower. Commodities, well, generally they look like they're all going up. Gold's slightly down today, and bond prices down, yields are up, right? That's what this is all about. Okay, connecting the dots between interest rates, bonds, equities, and currencies. If you don't know what you're doing, jump on our website and sign up for the course, because you need to understand these things. All right. If anything, I'd be very conscious about holding positions on the Jerome Powell speech. You can get ambiguity, positives followed by negatives, and you get just volatility, right? Liquidity is going to be at a stretch at the end of the week. Liquidity is already thin. So the moves are going to be exaggerated. If you've got stop losses 20 or 30 points away, they will be flushed out before you get a chance to even go in profit. So just be aware of that as we go through the session. The European session should be all right. Once the North American session starts, there's going to be a lot of hype around Jerome Powell and what's coming up. I think the market's going to be disappointed. But even if they're not, even if he comes out and talks up a hawkish stance, that is already across the market. So really, I can only see these markets correcting the exaggerated move that we've seen yesterday. All right. Anyway, it's a tricky one. All right, guys, all the best, and have a good weekend. Cheerio.